Good day, Tea with Travis. Today is October 6th, Monday, and I don't know, maybe a black Monday the way it's looking right now. Well, I mentioned in my blog on Thursday that people were criticizing this rescue plan and definitely are criticizing it Friday this weekend, and even today people thought, see, this wasn't supposed to be the case, we shouldn't have passed this bill and so on because there wasn't immediate improvement. Well, like I mentioned in my blog, this is kind of, I would say, this is comparison of doing the shock paddles to the heart of our U.S. economy, but it doesn't mean we don't have heart disease anymore. We need exercise and diet changes and everything else to get through this. And so for anybody to think that this was a plan that was going to make our market resilient and jump up in excitement and everybody's singing Kumbaya Monday morning, it was definitely not going to be the case, and I'm disappointed to see if anybody thought that was going to be the case. We're in a global economy, like I keep saying. And just because our Fed policy and our government stepped in and did a bailout of a lot of financial institutions and creating some liquidity and movement of money in our economy doesn't mean that the global world has stepped up and done the same. A lot of countries are letting their financial banks collapse and don't really know what to do. And so right now there's almost talk of a global rate cut for all the Fed banks around the world, in all the World Trade Organization, all the major companies that trade with the U.S., everything from Europe to China to Japan to different global economies, to do a national or international rate cut to get some liquidity going. Because right now, some countries don't have the opportunity to borrow from our Fed discount window like our banks do, with our Fed discount being down at 2%, and banks can borrow money, billions of dollars in the past 10 days or so, from our Fed discount window at a low percent of 2%, whereas you go overseas to Europe, and banks are trying to borrow from each other at an elevated LIBOR and London Interbank Offered Rate. Sorry about that. Then if it's at 6%, it's really hard to become profitable when they're in the out right now. Some early companies to get hit in the Nasdaq, and not even financially related, are eBay and Netflix. They're the leaders in drop this morning. And so, again, it's going to be bad for a while. The good news is this time is that money's going into mortgage-backed securities, and because of this Fed bailout or Fed rescue plan, there is creating confidence in selling mortgage-backed securities, because those mortgages will start moving again among investors and banks, because they have the ability to buy those packages again, unlike before when their money was all tied up in these bad loans and being devalued. So right now, mortgage-backed securities are up. They've been up as high as 72 basis points. Right now they're at 50. 50 again means 0.5%. So you buy a $500,000 loan, or actually that's a jumbo loan. If you buy a $400,000 loan, the improvement today from Friday is a $2,000 difference. You get the same rate for $2,000 cheaper. So it's a big jump today. Hopefully we'll close high and money is not just got pulled out of the market altogether. That's what's been happening last week when money should have went into mortgage-backed securities. It actually came out. People pulled the money and put it into their mattress or backyard, or even checking accounts if they trusted their bank. But with our new FDIC limits of 250, we should get some confidence back into our banking sector, in our community banks, and so on. Also, there's not real big economic reports coming out this week. The only thing tomorrow that's real impactful is the Fed chair and their committee meeting notes come out and are released to the public for us to see and what their comments and concerns are. Obviously, I'm sure those are jam-packed full of concerns and thoughts because of this meltdown. And these Fed notes were from their last meeting about 4 weeks ago, so they probably could see some of the writing on the wall coming, and it's going to be interesting to see the wording used in those. So outside of that, rates are better. I would lock in. The uncertainty right now is your rates could worsen as much as they did last Thursday when they jumped by 100 basis points. So again, that's 1% of your loan fee. So if when we're down like this and rates are at couple year lows, we're at 5.625 with about an APR of about 5.83 on a 30-year fix under certain circumstances. So when we're in the mid-5s, you're getting close to the mid-5s on a 30-year mortgage. That's pretty impressive. Also, the oil continues to drop. We're under $90 a barrel now. We're down to 89 as of trade, as of an hour ago. And if you've been to the gas pumps recently, you see it's directly coming down. I noticed it didn't take me $70 to fill my tank this time. So it's good to see it down to 3. I was even kind of forecasting and hoping, gosh, it'd be weird to see our gas prices on the signs back down under 3 in the 290 area. And that may be the case, the trend that's rolling right now. And our dollar continues to strengthen against foreign economies. Because our feds did step in, as much as a lot of people didn't agree with that bailout or rescue plan. I shouldn't call it a bailout because it is more of a rescue plan. our dollar continues to strengthen as other global economies struggle. So we caused a huge mess, but we're coming out of it slowly but surely, and just be patient. And I think we'll see some good things on the horizon, maybe if not this quarter, the start of the next quarter. So have a great Monday. A lot of information there. Hit you with a fire hose. But make sure to call us if you have any questions or concerns, and we look forward to serving you, and be blessed.